China's financial storm is imminent. After the central bank stabilized the exchange rate and the stock market, the offshore RMB exchange rate once rose above 7. After that, state-owned enterprises, powerful capital, and Wall Street capital sold stocks at high prices and exchanged them for US dollars to leave the market. China has seen a double kill of stocks and currencies, with A shares plummeting 16% in 3 days and the RMB dropping 1,600 points in a week. Today, October 15th, it fell to 7.13, a 2% drop in 2 weeks. In the next 2 weeks, it may be highly probable that the RMB breaks 7.3 and A shares break 3,000. The stampede selling of A shares and the exchange of funds for US dollars have become the norm, and the possibility of the double kill of stocks and currencies turning into a financial storm is increasing. China is intercepting capital outflows. In addition to restricting the transfer of funds and currency exchange, it has begun to tax the overseas investment income of the super rich. In recent months, some wealthy individuals in major Chinese cities have been asked to conduct self-examinations or have been summoned by tax authorities. People familiar with the matter said that the individuals contacted will face investment income taxes of up to 20%. Some of these wealthy individuals have at least $10 million in offshore assets, while others are shareholders of listed companies in Hong Kong and the United States. The cold winter of China's economy has begun, and a financial storm is imminent. Xi can't stand the bad news, and the inside story of the policy turn has leaked out. China's economy continues to deteriorate, but the Chinese Communist Party authorities have refused to take measures to boost the economy. It is reported that because bad news has come one after another, it has become too much for party leader Xi Jinping to bear. So the so-called rescue policy, lacking details and logic, has been introduced. The Wall Street Journal reported on October 15th that for 2 years, Xi Jinping has refused to take strong measures to support the economy. But in late September, he made concessions. Officials and government advisors close to the decision-making level of the Communist Party of China said that the finances of local governments are on the verge of collapse. For Xi, the short-term goal is not to stimulate demand on a large scale, but to prevent a brewing financial crisis. The above-mentioned person revealed that reports on the worsening liquidity crisis in various parts of China are constantly pouring into the power center in Beijing. It is particularly serious that local governments with tight finances have even found it difficult to pay salaries to civil servants and state-owned and private contractors. The report said that by mid-September, the economic situation had deteriorated significantly. Signs of malaise spread. The real estate crisis has also deepened, further suppressing consumption, which has already been weak due to the bleak economic outlook. Local governments have serious cash flow problems, said a person familiar with the matter. Measures must be taken to avoid a full-blown crisis. The report said that bad news came one after another, and by late September, it was so much that even Xi Jinping found it intolerable, so he decided to take action. Starting from September 24th, the Chinese Communist Party officially announced a series of rescue measures, including interest rate cuts, reserve requirement ratio cuts, lower down payment ratios for home purchases, and providing about 1 trillion yuan, RMB, the same below, of long-term liquidity funds to the financial market, spending 800 billion yuan to support the stock market. On October 8th, the National Development and Reform Commission of the Communist Party of China held a press conference but did not announce a trillion yuan economic stimulus plan as expected by the market, instead reiterating existing policies, which disappointed the outside world. The China Daily reported that Xi Jinping's centralized decision-making style has repeatedly led to sudden policy changes. This style has increased the opacity and unpredictability of the Chinese Communist Party government's economic policies, which may increase the risks of investing in China. The report mentioned that the mixed information about the specific stimulus measures to be introduced has caused investors to experience a roller coaster market. The market was initially boosted by the central bank's rate cuts and other easing measures, but the lackluster press conferences by other economic decision-making bodies dampened market sentiment. On October 12th, the Ministry of Finance of the Communist Party of China held a press conference and mentioned that it would issue additional special government bonds, but the specific amount remained unclear. People familiar with the matter told China Daily that the funds were not used to implement the large-scale fiscal stimulus, that many had long expected, but to ease the liquidity tightening pressure on local governments and inject capital into state-owned banks. At present, many new policy measures are more aimed at stabilizing local finances and then stabilizing the entire financial system and the overall economy, rather than directly stimulating the economy. People familiar with the matter revealed that this is not a stimulus measure, but a risk removal measure. China's stock market soared and plummeted, harvesting the hard-earned money of investors. In fact, this series of sharp turns by the Communist Party of China caused the Chinese stock market to soar and plummet, trapping millions of new investors as soon as they entered the market. According to statistics from mainland media, from September 24th to October 8th, 256 listed companies in mainland China issued announcements on reducing their holdings, of which 136 have disclosed plans to reduce their holdings. As the market continues to rise, the number of companies that have disclosed plans to reduce their holdings has also shown a clear upward trend. Many mainland stockholders disclosed to Reporter that many local governments are currently in financial difficulties and heavily in debt and have defaulted on civil servants' salaries. Many companies such as banks and real estate are in danger. On the surface, it is said to be a rescue of the market, but in fact, it is to help the government itself. Mr. Zhu, a stockholder in Hunan, said that local debts are very serious. Some hospitals and teachers cannot pay their salaries, so the people's money flows into the stock market. Listed companies take this money to produce effects. Those who pay taxes, and those who hold shares to solve local debts. The people are trapped and no longer believe in these policies. Mainland investment consultants revealed that China's stock market is too risky. Many companies are losing money and there are a lot of delistings. IPOs have become an industrial chain, acquiring companies, packaging them, listing them, and then selling them. A company can make tens of billions, or even hundreds of billions, just by going public, reaping the hard-earned money of shareholders. Many businesses in China are stagnant. Bosses use the two-day holiday to sell equipment and flee. The CCP prints money to save the market and create a false prosperity, but it cannot stop the continued decline of the real economy. Before the National Day holiday was over, news of a large number of factory closures spread online, and the market in many places was also depressed. On October 4th, just halfway through the National Day holiday, many videos circulated online, showing that factory owners in many places secretly ran away during the holiday, including Dongguan, Guangdong, Hangzhou, Zhejiang, and other former manufacturing centers. The videos show that some private factories had holidays for 2 to 3 days. After the holiday, the workers returned to the factories to resume work, but found that the factory equipment had been emptied and the boss had disappeared. Not only did the workers not receive compensation, but some of the wages owed to them were also lost. The workers complained. Some called the police for help, and some lamented, "What kind of world is this?" On October 6th, as workers who had been on holiday for 5 days returned to work, more videos of bosses running away circulated. The workers stood helplessly in the empty factories, and some cursed. In addition, videos of market depression during the National Day holiday were reported from various places. Netizens lamented that this year was the worst National Day holiday in history. The videos show that large shopping malls, commercial streets, vegetable markets, and scenic spots in Xi'an, Fujian, Dongguan, Guangdong, Sanya, Hainan, and Shanghai were all deserted and sparsely populated. The city center of a county town in Longnan, Gansu was even more desolate, with only a few shops open and the rest all closed. Recently, the CCP launched the so-called property boost policy and invested heavily in boosting the stock market. Although the property market has rebounded slightly and the stock market has soared wildly, economists generally believe that without the support of the real economy, these false prosperities may only be short-lived. Nomura Securities warned that the Chinese stock market will collapse after the frenzy, and the tragedy of 2015 may be repeated because the foundation of China's economy is more fragile than before the outbreak of the epidemic. Ghost high-speed rail station. The empty interior of Xi'an station was exposed. Some people warned that it was creepy at night. The Xi'an new area, which the CCP touted as a millennium project, has been established for 7 years. The interior of Xi'an high-speed railway station was recently exposed. The video shows that the entire station hall is almost empty. Some netizens said that it is a bit creepy to come here at night. According to the video posted by netizens, Xi'an Station has been decorated and put into operation, but there are almost no people in the entire station hall. The netizen who filmed the video said, "Looking at the whole of Asia, the only high-speed railway station that can be built as big as an airport is Xi'an Station in Xi'an New Area. It is really big. If you come here for the first time, you will definitely get lost in it." According to the footage filmed by the netizen, you can see that there are almost no people in the hall. The netizen said, "It is really super empty, mainly because there are few passing cars and local residents. Generally speaking, Xi'an Station is not really running now. I have seen many people say on the internet, how big this station is it important? If there is no one, it will be in vain." The netizen also said that if you come here at night, it's a bit creepy and a bit scary. Xi'an New Area was officially established on April 1st, 2017. It was originally positioned as an evacuation area for non-capital functions in Beijing. This is a key project promoted by the leader of the Communist Party of China, Xi Jinping, after taking office, and he called it a Millennium Plan. However, Xi'an New Area has not been favored, and its construction has been intermittent over the past few years. In May 2023, when Xi Jinping visited Xi'an New Area for the third time, he said that his decision on Xi'an New Area was completely correct and cannot be impatient. He also revealed that the work of relocating Beijing institutions to Xi'an has encountered various forms of soft resistance. In his speech, Xi warned, "You can't move based on your own likes and dislikes. You have to move if you need to. You can't do paper relocation or disguised return." Xi'an has been under construction for more than 7 years. According to videos shot by netizens earlier, although Xi'an is full of high-rise buildings, it is almost an empty city.